morning. Ira Epstein of Linn Associates with your morning flash update for this Thursday, April 30th, 2020 at 9:20 a.m. Central Time. So we're getting a bit of a correction in the stock market. All the euphoria yesterday carried the market up. If you look at your Bollinger Band numbers, right up to the top of them, and if you got my morning subscriber video, you know what I said. I mean, I stuck my neck out this morning, and you'll take it from there. Keep your eye on gold. You're having an outside day, and the low didn't take out a previous low, so we could end up for the first time, if the market closes on a positive note, with higher lows, higher highs, and it might be over the 18-day average of closes. That could be the first interesting number there. I looked at silver. I didn't know those numbers were right. I was questioning them today. When I got up, silver was up strong from here, 60 some odd cents. Then it fell, came down $1, and now it's back. It looks to me like something big is happening. I don't know what it is. Could be a big trader doing something in the market. In the copper market, if you look at your Bollinger Bands, and I want you to, you'll see where the market keeps failing against the upper band. So that's the resistance zone. It's looking as though, to me, that the washout that we saw in the crude oil market, what is it now, over a week ago, might have been it. I just noticed that some of the big firms, the clearing firms, have gone up to exchange margins of 150% in crude oil. It's their way of telling traders, don't be involved. You know, when you got to put up that kind of money, that's going to be about $15,000 a contract. It's going to drive traders away from the market, and that's what I think is going on there. I like what gasoline is doing. It's acting to me like it's bullish, wants to move higher. It's anticipating that drivers are hitting the road, coming back, not with a force, but gradual, which is better than nothing. I just read today that Macy's is opening 68 of their stores this week, and another trench of them will happen next week. So we're starting to get back to whatever the new normal is. I'm not saying people are walking in and it's the same thing it used to be. In the grain market, we still are looking at the beans up. And for those of you that get my updates, you know I've been talking on these that I thought this market in the 830 area started to act like it didn't want to go down anymore. 15 cents higher today. Possibly we're getting some Chinese business. That could be very good. And the whipsaw is continuing in the bonds and notes. Why? If you study what I do and you get my subscriber video, you're going to see that the market's trading in what we call a neck. In other words, the Bollinger Bands have narrowed in and going long sideways, and prices just whipping back and forth in them. That's often the prelude to a trend trade about to set up. Not there yet. Don't know which way it's going to go. We will find out, though. As for the day's data, we're going to get the EIA numbers in a few minutes here, and they're looking for it up 70 billion cubic feet. Jobless data, obviously that's the big number today. It is up 3.84 million, which is still down 603,000 from last week's report time. The employment cost index, well, it went up, and it should. You know, everybody's paying, and it's costing the employers more to keep these people that they should keep on their payrolls, and they're doing that at this point in time. Let's see if I can get to the next level here. Personal income and consumption. We've got the PCE price data up 1.3%. The PCE year-over-year index up 1.7. They expected it 1.6, so it's pretty close. They met their March core PCE, and you can see where the rest is. But the consumption spending month over month down 2.5%. They expected it at 5%. So 7.5 is 2.5 percentage points bigger than the expectation, but it keeps dropping away. That too is going to change. As we start reopening states and stores, you're going to see those impact these indexes, and we're going to see this flat line show. The real problem is going to be for the markets. Remember, we're getting into that sell May, go away mentality. And we're about to get economic data that is much more, not normal, but the new norm. As states reopen, we're going to see a moderation of these terrible numbers, but the new norm might not look so good. So you've got to be concerned about that and see where that's going to carry the marketplace. You know, you heard me allude to what I do in the mornings. I come out, and typically, today I was a little later because I wanted to hear the European Central Bank, by which the way did nothing major new. They are changing how the banks can get some money with lower rates, but they didn't do anything for the general part other than Ms. Lagarde saying the government's got to step up and spend. But in the morning, I review 40 charts, and it's timely. It's before the markets get going later in the day, and it gives you an idea where I think you should go in, go out, buy here, sell there. I'm going to be wrong. If you're looking for me to walk on water, don't even bother with it. I don't. But you will look at disciplines, and you're going to understand the concepts that I bring to the market. I cover all these different markets with 40 different charts in the morning, and believe me, if you watch me, you know I'm not bashful. So I will stick my neck out and tell you what I am seeing, when I'm seeing it, what to be done, and when to do it. So I think that's a pretty interesting part to everything. It's not expensive. It starts off at $7.95 for the first 30 days. We want you to see it, and if you like it, you have two ways to continue. First of all, you don't have to continue. Second, if you do, it can be $15 every 30 days thereafter. You can buy a year up front for $156, which is your best package. That gets you going on everything. How do you get to it? Go to our website, and under the word research, you'll see all the explanation of it. If you're a SPDR ETF trader, I also have one of these that I do in those. And today I did not do the early morning SPDR video. I'll get to that talking to those people very shortly. But to make a long story short, that's how you do that. You can call us. We will get back to you, I promise you. So if you make a call, we get back in a very short period of time. We can help answer your questions and so on. In the meantime, you have a great trading day. I will catch up with you all at the end of the day. Trade carefully.